So back in February of 2026, a real shockwave ripped through the Indian IT sector. And if you were an investor, oh, you felt it. A single tech demo kicked off this huge crisis of confidence that just spread like wildfire through the entire market.
2 lakh crore rupees just gone, wiped out in a single day. You could feel the panic. It was everywhere. And the headlines? They were just screaming that the fundamental business model of Indian IT was completely broken. And believe me, the pain was very, very real. By March 2026, the Nifty IT index was down a staggering 27% from its 52-week high. For a lot of investors, it probably felt like the floor had just completely vanished from underneath them.
All this fear, all this panic, it really boiled down to one single question on every single investor's mind. Is this truly the end of the road for IT stocks? Or just maybe, is it the beginning of something much, much bigger?
Now, to answer that, we really need to look past the immediate panic. To understand the future of Indian IT, we first have to look at its past. And when you do, what you find is this remarkable, almost unbelievable pattern of resilience.
I mean, think about it. This is not the first time Indian IT has been declared dead. Remember 2000? The dot-com bust. They survived by moving up the value chain. Then 2008, the global financial crisis. What happened? By 2011, they were hitting record revenues. In 2016, everyone was terrified of automation. And what did they do? They became the partners who implemented that automation. 2020, a global pandemic shuts down the world, and they triggered a massive digital transformation bull run. See the pattern? Each time they adapt. Each time they emerge stronger. Which, of course, brings us to today, the great AI disruption.
So, history shows us that survival has always, always meant evolution. And this time is no different. But this evolution is happening right at the very core of their business model. It's a pivot, from bodies to brains.
You see, for decades, the Indian IT model was super simple. Man-day billing. The more people you put on a project, the more revenue you made. It was a headcount game. But AI just completely changes that math. Now, the big shift is to something called outcome-based pricing. Here, revenue isn't tied to how many people you have, but to the business results you actually deliver. Better, faster results, all powered by AI, means more revenue. This isn't just some small tweak, it's a fundamental reinvention of how they make money.
So, okay, what does this actually mean for you as an investor? Let's break it down. Top-line revenue? Yeah, it might see some pressure in the short term. But, and this is the important part, look at the margins, the profitability. With AI, a smaller team can deliver way more value, which means more profit per project. This protects the earnings per share, the EPS, which is what ultimately drives value for us shareholders. And this, right here, is the key insight. The market seems to be panicking about the top line while completely missing the potential for massive strength in the bottom line. But listen, this isn't just some theory about the future. This pivot is already well underway, and the data? Well, it reveals this unseen AI gold rush that the headlines are totally missing.
And the data is, well, it's striking. Just look at the new deals signed in the last 6 quarters. A massive 74% of them are already AI-focused. The entire deal pipeline has already been transformed. This isn't some future trend we're talking about. This is the reality on the ground right now.
And when we dig into the company specifics, we can see exactly who's reading the charge. HCL Tech is way out in front with a stunning 139 AI-focused deals. Wipro is right behind them with 83, and the giant TCS has 81. They aren't just talking about AI, they are actively booking billions in AI-centric revenue. And all of this is happening against a massive, massive tailwind. Global tech giants are projected to spend a staggering $650 billion in 2026 alone on data centers and AI. And guess what? Every single dollar of that spend requires implementation partners to make it work. And who is the undisputed global delivery engine for that work? You guessed it, Indian IT. Okay, so let's recap. We have a sector that's historically resilient, it's actively pivoting its business model, and it's winning this flood of new AI deals. Now let's see how all of that stacks up against the current market valuations. So right now, the Nifty IT index is trading at a price-to-earnings multiple of around 23.6. That's a huge discount to its 2-year average of nearly 30. The market is basically pricing these companies for a collapse, not for an AI-led transformation. This brings us to a term that long-term investors absolutely love: deep value. And it's pretty simple.
It just means an asset is trading at a major discount to its historical worth, usually because the market is way too focused on short-term fears. And that is exactly what we may be seeing in the IT sector today. So where's the opportunity? Let's start with the giants. First up, TCS, the steady compounder. Their brand is basically a fortress, and a massive $25 billion order book provides a huge safety net. They've already trained over 100,000 employees in AI and have 81 AI deals in the bag. The outlook here is clear: stability, with AI set to lift margins over the long term. Next, you've got Infosys, the aggressive transformer. They are arguably the fastest large cap to adapt, thanks to deep integration with Microsoft's ecosystem through their Topaz platform. They've rolled out AI awareness to nearly their entire workforce, 270,000 people, positioning them perfectly to grab the next big wave of AI deals. Then there's HCL Tech, the AI deal machine. Their hybrid model of products and services gives them a nice revenue buffer that others just don't have. But the key stat here is that market-leading 139 AI-focused deals. Their CEO even projects this business could hit $3 billion. That would more than make up for any slowdown in their legacy services. And what about Wipro? Let's call them the AI-first turnaround. What's so fascinating here is the sheer concentration. A whopping 83 of their last 99 deals were AI-themed. They are completely all in. This is a clear turnaround story with a laser focus on becoming an AI-first operation. And finally, Tech Mahindra, the 5G and enterprise pivot. This one is a potential high upside turnaround play. Their telecom vertical gives them a really unique multi-year tailwind from the global 5G rollout. And under new management, their focus on improving margins could unlock some serious value. So when you put it all together, you take the history of resilience, the business model pivot, this absolute explosion in AI deals, and the deep value valuations, a very, very clear picture starts to emerge. And it's a picture of conviction. The takeaway is this: the top line will transform, the earnings will hold, and the next bull run is going to reward the patient investor. So the question for you is, amidst all the fear, do you see the opportunity?